Well, I guess it's another time for an episode of Winning with Winans. Let's go. Well, hello, everybody, and welcome to another exciting episode of Winning with Winans, Las Vegas' newest and coolest financial show. I'm your host, Ken Winans, and for the next hour, we're going to be covering a lot of things going on. Oh my gosh, the world is full of news. But you know what? It's interesting because, quite frankly, it's the right people at the right time to have these discussions, especially about real estate. So before I bring on my guests, a little bit about me. I have been a financial commentator for over 25 years. I write for Forbes. Obviously, we do this podcast. I do a lot of work with radio. And most important is that I founded a investment management company back in 1992. And we are the only Morningstar top-ranked manager anywhere in Nevada as of right now. I'm very proud of that fact. We're top of the heap, as they would say. So listen, let's get into this very important topic, and with one of my oldest compadres in finance. Jim Wilson is CFO of Evolution Investment Management. I dare say he's one of the smartest guys around when it comes to real estate. His pick of baseball teams is a little questionable, but that's okay. We'll let Jim go with that. Jim, how are you doing today, buddy?
I'm doing great, Ken. How are you?
Pretty good. Now, where are you located? Usually you travel the world. Where are you today?
I am in my dining room, as the background might suggest, in California. I live in San Rafael in Marin County near San Francisco, just down the road from where you used to live, an office for many years.
And we still do have an office there, as we have our headquarters now in Las Vegas. Hey, listen, this perfect time to talk about real estate, because it is interesting that literally today we had basically pending home sales come out. Now, let's talk about the data. I mean, the government comes out with this data once a month. There's usually a projection, I guess, for lack of a better term, because it's always done by surveys. There's revisions over the next 3 months. Were you surprised by the numbers?
I take, step back. By way of background, Ken, introduced me. I was a sell-side home building analyst, a research analyst for 25 years. And I decided about 30 years ago that it was good to ignore the government data, look at it on a broad brush basis over 6 to 12 months, but the month-to-month data is based on a survey. If you actually look into the report, the plus or minus revisions are often on any housing report 20 to 30% either direction, meaning in a housing markets that don't move much more than 5% one direction or the other ever in a year, with a few exceptions. You just can't trust the data. So, the housing market is stuck. It's been stuck since post-COVID. COVID created a few things in residential housing. And obviously, we're talking just about the residential housing market right now, although much of the same is true in commercial housing and other commercial real estate and other parts of the economy. But coming out of COVID, we had the new ability to work from home. We had the opportunity for many people to leave expensive places like California and New York, and in a very short period of time, move to places like Nevada, Arizona, in the West, Boise, but certainly Florida, obviously even more than anywhere else, and of course, Texas as well. And you had a spike in demand, very quickly followed by the Fed cutting rates back down to about zero, which led to mortgage rates of 3% and created an enormous housing boom bubble that put people in great position. So anybody who bought, who financed then is sitting great, but the market houses aren't turning. Yeah. And the problem now is that everybody's expectations as a seller are very, very high, and the ability and the price and the payment that people can make of a new buyer with higher interest rates, particularly as you noted, very high, highest rates we've seen in many, many years right now. The market's just frozen and stuck, and there's a big, as we say in Wall Street, a big bid-ask spread between what sellers are willing to pay or sell at and what buyers are willing to pay. And it's stuck. I'm unfortunately not sure how that's going to break other than through a recession in the foreseeable future, meaning the next 4 or 5 years.
Well, Jim, let me ask you this. I mean, and you've taught me this. Unlike the stock market where you can look at an index and say, oh, that's what stocks are doing. I mean, real estate is very regional. And I know that, if you look at the different parts, and I have to say, you got to look at blue states, you got to look at red states. I would say that certainly the data coming out of Nevada or Arizona looks very different than the data coming out of California. I mean, right now, our biggest problem is that we have a land shortage. Bureau of Land Management needs to release more land. Builders are getting antsy. They got everything. They finally got everything they need. They've got the labor, they got the materials, but they don't have the land. So and that's a very different story than you might find somewhere in the Midwest. So when you look at, like, for instance, in California, and in a moment we'll talk about what evolution does. I mean, can you make a case for buying California real estate right now across the board?
Well, again, like you said, very selective, depends on the category. We started here on residential. We'll move to commercial later in the segment separately. But on the residential side, so it's interesting. I'm sitting in the Bay Area. The Bay Area has a new boom for housing, and that is the AI boom. So it's quickly created new companies, new jobs, peripheral housing demand, probably faster than I've seen a demand shock hit a market. I mean, we were both around, of course, during the dot-com boom, and we had a housing rally, but not as fast as we've just had in the Bay Area, and particularly San Francisco area, including where I live in Marin County, more so than even San Jose, just because the new startups, all the new job creation actually is in San Francisco. But that's very unique. It has nothing to do with the overall economy, interest rates, anything else.
Yeah.
But you're right. In the rest of the housing markets, you've got a lot of battles going on the supply side and demand side. So you're absolutely right on the land. There's been a shortage. It doesn't come out. We've had price pressure on home sales. Public home builders who dominate the new home market, and now just the public companies are well over 50% market share of the new home market. They have the most land, but the battle on the price side, what they're able to do that no one else can is they have the balance sheets to buy down the mortgage rate of a potential home buyer. So if you go to a D.R. Horton community or you go to a Lennar community compared to any private home builder or the resale market, Horton or Lennar can buy what's currently a high sixes mortgage rate down to 5%.
Yeah.
Down to something that can put you in the house, hence allowing them to, again, dominate a market that's not moving in general, allowing them to dominate the activity because they're the only ones with strong balance sheets to do so. So anybody looking for a home, I'd actually tell them to agree, who the public home builders are. Go look at D.R. Horton, Lennar, Pulte, Toll Brothers communities, and you're going to find the most affordable relative mortgage rate and home payments compared to buying an existing home or buying somebody else's new home.
It doesn't need to be remodeled. Hey, Jim, listen, hold your thoughts, okay, buddy, because we have to take a quick commercial break, and we will be right back with Winning with Winans and jump into our bonus podcast section. And welcome back to Winning with Winans, Las Vegas' newest and coolest financial show. Even though we're talking about real estate all over the country today with one of the smartest guys I know in real estate and one of my dearest friends, Jim Wilson, Chief Investment Officer of Evolution Investment Management. Jim, let's continue where we left off, but let's jump into what Washington's trying to do. As you and I know, they always like to try to fix things. Let's talk about that housing bill that both houses of Congress, it looks like it's going to go through. I guess the theory is, and let me walk through this a little bit. The theory is that big institutions, big private equity firms are buying up the housing stock and they're leaving the individual in the dust. Would that be a good summary of what they're trying to fix?
That's yeah, they're trying to fix a problem that doesn't exist and they've got it backwards. But anyway, go ahead. or I can just extrapolate on that.
All right. Well, here on it. So in your opinion, it is going to go through, right? Is it safe to say this thing is going to be put in place?
Well, so they have nuances. So there is they don't want the large institutional owners to buy more homes because on a bipartisan basis, they've decided that has had a negative influence on housing activity and bid up home prices. First, that's all completely incorrect. So there's two public REITs that do this, and really, particularly when you compare this with private equity and real estate in every other category of real estate, there is very few players of any size in this single family business. So a handful of private equity, they were big buyers coming out of the great financial crisis and buying up all of these foreclosed properties from 2010 to 2017, 18.
Got it.
When rates have gone up, these players actually haven't been buying. The REITs have been net sellers for, 5 or 6 years now. They have not been buying at all and have absolutely no influence. Again, I would go back to where I started on housing. Congress always means well. They meant well after, I believe they actually always mean well. They just don't know what they're doing. They meant well after COVID. They added $7 trillion capital in the economy. The Fed helped out with its own $7 trillion, probably 10 times what the economy needed, and, kind of created this bubble problem that we can't get out of. So they are trying to fix something that isn't the problem. The problem is we need more supply.
Yeah.
This more supply of houses, whether they're for sale or for rent, but 95% of what's produced by the housing industry, new housing industry, is for sale. It's definitely not for rent.
Yeah.
For rent is a very small portion of it. So they're going after for rent like it's been an issue. It's not been an issue. We now have a divergence between the Senate and the House. The House bill got rid of part of the single family requirement, and the single family requirement had anybody who built a rental home for sale had to sell it to a home buyer in 7 years. The House, that was from the Senate proposal. The House took that out. Now it's back to the Senate for reconciliation. We have no idea where we're going to end up. You do want them to build for rent, just like you want them to build for sale. It still doesn't go back to the problem is all locally and land and freeing up land. Land prices are way too high and the land sellers don't have to budge because they know there's a shortage enough that the builders are going to buy from them when they have demand, and the builders need to build.
Well, Jim, real quick, and this is what's funny, is that here we're talking about government trying to solve the problem, putting a whole bill together, and they got an agency just down the street from the Capitol called Bureau of Land Management that won't release land that's needed to build houses because they worry about the desert tortoise and all these other things that are out there. So I just find it comical, as you say, they mean well, but they really haven't thought through the situation as we see it right now, in my opinion. But hey, listen, I want to get into your stuff. So now, Jim, you've been in this game a long time, and I'm just going to bring up real quick that you saw what was going on in Las Vegas before Vegas even realized things like Summerlin that were at that time when you saw it was nothing but a patch of desert that's now become one of the most thriving planned communities anywhere around and continues to grow. I guess my question for you is, are you surprised? I mean, you've got to be somewhat surprised by the migration issues. I don't think either you or I ever thought that New York would move itself to Dallas, or that, certainly LA, the migration out of California. I don't think you and I ever foresaw this, but are you surprised at how well these planned areas are doing?
I'd say no, but starting 30 years ago and watching it, the opportunity, the level of sophistication of the plan developers, in this case, Summerlin is a public company. It's Howard Hughes Corp. It wasn't, 30 years ago, it wasn't called Howard Hughes Corp. It was a separate company. Two, three mergers later, and a spin out. It's the Howard Hughes company that's the developer of Summerlin, and really Howard Hughes company is the largest master plan developer because that's all they do. They don't build homes; they simply do all the master development. The planning and the design, the amenities, how they work with the communities, whether it's in Las Vegas, they have one now in Phoenix. They have a couple of major ones, including the Woodlands in Texas. Yep. They're just very well run, well thought through, well coordinated with local authorities. And so I guess maybe just because I've seen it and watched it day to day as part of my work, that I'm not surprised how good they are and how much economic benefit they bring to every city and every location they do this. And again, big home builders will do these master plans. D.R. Horton has some, Lennar has some. Howard Hughes, you're mentioning, happens to do that exclusively and is not a home builder.
Now this brings us up to what you do. Now let's talk a little bit about your company. Sure. You're the chief guy that makes decisions on buying or selling properties. I mean, now you're primarily looking at what? Investment properties, commercial properties? Yeah. What are you looking at?
Yeah, sure. So Evolution Investment Management, which I own with a partner who I worked with at a public investment bank called JMP Group, JMP Securities, that was then bought by Citizens Bank, the big bank. We spun out the real estate investment management business that we were also running while there in 2023, and are on our fourth opportunity fund here. We are targeting, we can invest in any part of real estate. We are targeting, though, attractive current cash yields in the 6 to 8%, kind of, if you think of dividend yield, but, current cash on cash property level yield. And we are targeting total returns on investment of 20% annualized, and typically a 2 times multiple. So we're looking at buying a property, putting capital in it to improve it, and sell it 5 years later on average, right? It varies a lot. We can invest across all of commercial real estate and residential for that matter. We did do one small land investment early on, but we've predominantly been doing apartments. We find them to have the most attractive long-term supply-demand dynamics, although we have been going through, like everywhere else in real estate, post-COVID, post the massive injection of capital, and post the Fed cutting interest rates too far, too fast. All of commercial real estate had its own bubbles. Office has had the biggest. And so all of real estate's been working through that. But
Yeah.
we're finding much more attractive investment opportunities today. And, we are particularly looking in, Sunbelt, apartment, multifamily markets to make investments. The one
So-
we're working on right now is in Dallas, for instance.
It is. So you're staying away from pot farms in Northern California?
Well, you never know. There might be some good ones. So
Well,
we do own a little bit in Los Angeles, a little bit. Four buildings, 1920s vintage high rises along the Wilshire corridor, very classic old Hollywood buildings. But that was a unique opportunity that's really attractive. And we actually own the Warner Brothers studios in Burbank. These are our only two investments actually in my state in California. But we're but anyway, that's what we look at, but mostly apartments.
So let me ask you this. So just looking, but like regionally, so your firm right now, and you guys you're in California. Your firm's actually based in Texas. I believe you're in Austin.
My partner, Ken Ledbetter, and our operations are based in Texas, in Austin.
Got it. So, but you're really, like you said, although you're looking everywhere around the nation, you're focused on Texas. You're saying with the criteria you laid out, you're having a tough time finding those kind of cap rates in some place like California.
Yes, difficult, very difficult in California. We own we actually own in, like you said, back to the residential discussion, no different for commercial. Markets vary. We own in New York, in Brooklyn and Williamsburg. We own in the Boston area, for that matter. So we'll find opportunities a lot of places. Right now, the most distressed prices are in the Sunbelt market. We're trying to be careful. We're still being slow at deploying capital. But we've found 2 or 3 opportunities recently in Dallas.
There you go. Well, I mean, I think it's safe. And so you're looking at areas where there's natural disasters, Jim. That's good. Earthquakes, hurricanes, tornadoes. That's good. Mm-hmm. So you're looking at
there's something to be wary about everywhere.
Not in Las Vegas, my friend. We only have heat. Yeah, there's a reason they were doing atomic testing here. Hey, listen, we've got to take off here pretty quick. So if people want to learn more about what you do, where should they go?
You can reach out to us. It's Evolution Investment Management, our evolutionim.com. They can certainly reach me at Jim Wilson at evolutionim for investmentmanagement.com. But yeah, I mean, things starting with our website, but obviously, always happy to talk to folks.
Well, Jim, I thank you for your time, buddy. I'm sorry we had some technical glitches, marvels of society, but listen, my friend, you have a great holiday weekend. Enjoy yourself, and thanks for your time.
Great. All right. Thanks, Ken.
And everybody else, we'll be right back with Winning with Winans to hear what's going on in the markets. And welcome back to Winning with Winans, Las Vegas' newest and coolest financial show. I'm your host, Ken Winans, and I hope you enjoyed the last segment with Jim Wilson, who's CFO, CEO of Evolution Investment Management. He is one of the top guys I know in real estate. He gave us a great picture of what's happening. So let's talk about what else is going on in the world. There is a lot. Well, you know what? Obviously, the war continues to be in the headlines. Everybody's worried about it. Obviously, it's going on longer than a lot of people thought. It's caused a lot of volatility in the markets. But here's the thing, folks. U.S. investments are in demand. I know for us, we've been fully invested through this entire situation, and portfolios, knock on wood, are up strong this year. Now, it does mean all of you need to have a talk with your investment advisors who might have sold you on the concept of being invested in markets all around the world. There is a reason that foreign ETFs, I'm talking about, Europe, Asia, emerging markets, South America, all over. Here's the thing. Yes, some of them are doing pretty well this year. Believe it or not, especially in Asia, except for China, if you back into it with looking at the dollar. But here's the thing. I don't think it works all the time. It worked well last year. Everybody had a good time. They made a lot of money in the foreign markets. Then here comes the war. Dollar comes roaring back. And if you're a U.S. investor, guess what? When you own a U.S. stock, they're international companies. Every single one of them that you buy probably is. So you have to think about that as you go forward. The other quick thing that I think was interesting to talk about, and I mentioned it last week, my latest Forbes article. I've had a lot of you ask me about it. Look, I don't believe in selling, especially in the tax world that we live in, selling all your stocks in May and going away. Sounds nice in theory, doesn't work in practice because although it can be volatile through the summer, and historically it has been, I don't think it necessarily makes sense to get rid of everything, but get rid of things that are not working. If you have stocks that have not moved at all this year, you should get rid of them. That's what we do. You just like with a garden, you trim back dead branches, get rid of them. Okay, let's talk also about the war. This is a tough one. It is different than Iraq and Afghanistan. I've brought this up on all the last major shows that we've done. Folks, war is tough. I'm a vet. We have people who work on the show who are also veterans. It's tough. It's difficult to talk about these things. But the reality of it is the way the markets are acting right now, the economy is generally doing pretty well. And even with high oil prices, the market is acting as if it's not going to matter in the long term. It's just the way it is right now. So don't let politics and geopolitical events drive your portfolios. Okay, let's talk about corporate earnings. First off, I mentioned earlier, U.S. companies are doing great. 95% of the S&P 500 have posted their earnings. Guess what? Tariffs didn't matter. And in fact, what's funny, and I'll talk about it in a moment, the president just came back from China, met with the powers to be there, and a lot of our corporate executives went with him. And guess what happened? They did deals. They signed contracts. There was another report out. Europe is now cutting contracts as well. And so the tariffs, although we're going to decide on refunds and all that, the simple reality of it matter is it doesn't seem to be affecting things right now. The world's a strange place, but business is business. Okay, I've got to have a little fun with this one. Hey, our industry is a very competitive industry, very competitive world. So BlackRock, which is the parent company of iShares, you often hear about these low-cost ETFs. Well, low cost does not mean unprofitable. The CEO of BlackRock last year was paid $38 million in annual pay. It has a few eyebrows going up amongst people that work in the financial service industry. But again, I would just caution you that when you see things that are low cost or they say there's no fees up front, you're smart investors. Be careful. Nobody works for free. Okay, hey, let's talk on a positive note here. What is everybody talking about? The SpaceX IPO. It's now slated for June 12th, but anybody who follows anything in space knows there can be delays. That's the interesting news. It could possibly be the first $1 trillion IPO. Bad news. You cannot get the shares. They're not, Elon Musk is going to hang on to control of SpaceX. They're not putting that much out relative to the size of the company. So, I've been asked by everybody, how do I get shares in this thing? Let me give you a piece of advice. I've never been a big IPO fan. For every one single hot IPO you might get, unfortunately, the rules of the game are you have to buy 9 others, and maybe 3 or 4 of them are not going to be great. So you got to be thinking about that. Okay, let's talk about some economic news. Hey, I mentioned it earlier. In spite of everything that's been happening, and you're hearing about, volatility in the dollar, you're hearing about volatility in interest rates. Well, guess what? The dollar is within a range it's been in for the last 3 years. Actually, interest rates are in a range too. Although they're higher, they're higher than they were, but that's all relatively speaking. But you know what? I know everybody likes to try to point to, especially in election years, they misread historical economic facts. This is not the 1970s inflation spiral. I was young back then, but I remember very well. You had people waiting in line to get gas. You had the dollar lose a third of its value. We do not have that going on today, folks. It's a different world. Inflation's a problem. We all know. Go buy gas or go try to buy groceries and know what's going on. But the reality of it is, it seems to be okay. Okay. New Fed chairman, Federal Reserve Chairman Kevin Warsh is going to be taking over. By the way, interesting, he is supposedly the richest Fed chairman we've ever had. So anyway, we know he's not doing it for the money. But anyway, again, historical comparisons, trade deals with Europe, China. He's got a lot on his plate. I do think rates are going to stay constant for the remainder of the year as long as inflation is still high and the war goes on. But I think that that, and on top of it, the other big news that he's going to have to rally around with the breakup of OPEC. I mean, we know that UAE left. We now have new deals set up with Canada and Mexico. All these things are going to happen. There's been a lot of articles written about the new world order in oil. We're very much a part of it. Remember, we're also an exporter this time. Another reason is different than the 1970s. Whew, got through a lot real fast. Okay, let's have some fun. Okay, would we all not like to have this happen? I'm sure all of us have gone to auctions for charities and schools. I go to the Golden Knights Gala every year, always overpay for things. Believe it or not, somebody went to a charity auction in Florida and was able to get, and I'm not kidding you on this, a $1 million Picasso painting for $117. Now, the person who donated it ended up getting a nice tax write-off. Most people probably thought the thing was a fake, or they were actually probably drinking so much they weren't paying attention. But whatever it is, congrats to the person who was smart enough to pull that one off. That's quite a deal. Okay, I talked about it last week about the Senate banned, basically that senators cannot play in the prediction markets. But guess what? Politicians still trade stocks. Now, I've been picking on the Democrats a lot, but listen, we got to have a talk about President Trump. Now, let's also understand, when you become a publicly elected official, you have to turn over all control of your portfolios to third parties such as me, Winans Investments. I mean, we manage a lot of third-party accounts for wealth managers, financial planners. But here's where it gets funny. According to an article that was in the Wall Street Journal during this last week, the president's accounts traded 3,700 times between the beginning of the year and April. Wow. Let me tell you something. I trade commodities. I trade stocks. I have never traded that much. So I don't know whether or not his advisors know what they're doing. But I'll tell you what, President Trump, you're probably going to have a lot of short-term capital gains or losses. So, it's just part of what happens. Okay, last thing is pretty funny. We've all been talking about the cost of education. Okay, this is pretty funny. MBAs are not in demand the way they used to be because now people are getting licenses like the Series 65 that we sponsored at UNLV earlier this year. So MBA degrees are actually going on a discount now. Now, that's pretty wild when you think about a discount. Anyway, so you can't say education costs are still going up. And so this is a business degree, master's in business, but it does raise the question on the value of it when you're out there in the workforce. Okay, listen, we have to take a very quick break to hear from our sponsors, and we will be right back to Winning with Winans. And welcome back to Winning with Winans. We have had a fantastic show today, and I hope you all enjoyed it. I especially enjoyed our guest, Jim Wilson, Chief Investment Officer of Evolution Capital Management. We talked about real estate. And you know what? The world is full of funny news right now, a lot of things going on. But you know what? I try to cover also what's happening locally. My investment management firm is based in Las Vegas. I care about our city, our state, and we have to look things regionally. So this segment, we want to look at Nevada news, and if we have time, I'll talk about some of the ever-growing crazy things that come out of California, our neighbors to the west. But listen, first thing, and again, everybody's talking about how bad. I mean, I love it that these folks from other states talking about how supposedly nobody's on the strip anymore. Supposedly no one's staying in hotels. Well, guess what was in the papers over the weekend? Hotel rates in Las Vegas for the summer. You ready for this? They're heating up. They're not going down. If the economy was bad, folks, we would have discounted hotel rates all up and down the strip. That is not what's happening. Now, I'm not saying there are not some issues. What I'm saying is when you have rates going up, people are basically, I think they're going to stay in the United States for this summer season. And Vegas, I think, could be a winner of that. Also, many of you know, and I'm a big Golden Knights fan, we have a lot of hockey going on. And you know what? Who are our neighbors to the north who love hockey? The Canadians. I think all has been forgiven, at least with the people. They want to come down here. They love coming to Las Vegas. They love hockey. They love our Golden Knights. The simple fact of the matter is, I think that there's a lot of good green shoots happening in the economy, and I would be careful. Don't pay attention to negative news that are in political ads. I'll tell you right now, I'm a trained statistician. Most of that is BS, or it's misguided, and it's meant to prove an agenda, not necessarily the facts. Okay, other thing that was interesting. I went to the Las Vegas Chamber of Commerce Economic Development Committee meeting earlier this week, and it was very interesting. We were talking about, hey, we all know what's going on, the migration of people coming here, the lack of land. We talked about that early in the show with Jim Wilson. The water came up, but this is what was interesting. For those of you who might have remembered, about a month and a half ago, we had a guest who's Assemblyman Joe Dahlia, who's running for treasurer. Well, he was very proud of a bill that he put in place last legislative session about a year ago called business courts. Well, the business courts, everybody agreed was a fantastic idea, bipartisan support for this. So that was number one issue that everybody felt was really going to help the Nevada economy and Las Vegas. There was a lot of talk about alternative energy, solar panels. You know what? There's going to be continued growth of what we're calling our green network. And for any of you going north of the 95, you certainly are seeing those brand new power lines we're putting in. State-of-the-art, high-tech, very efficient. Our state is getting ahead of the curve. And the part that I like about it, it's not a competition between Southern Nevada and Northern Nevada. It is Nevada. Our futures with our neighbors to the north are very important. We're doing that. But let's talk about the other one that, I'm sure you've all been reading the headlines. This is going to be, Lake Mead's supposed to drop, further than it's been in a while. So power and water came in the issues. But this is what's interesting. There was not a lot of talk about the Colorado River. What there was talk about was that we have water management statewide, and they're trying to figure out ways to reallocate the underground water use. We don't realize that Nevada has a lot of underground water. I actually thought about this. I don't think many of us actually even think about this. Lake Mead. You've had that around since the 1930s. There has been the Colorado River running there for 100,000 years. You have soaked the soil all around Lake Mead, all around the Colorado River. That has been feeding things. So even if we had no running river water, if Lake Mead was down to nothing, there's still a lot of water in the soil underneath Lake Mead. We need to think about groundwater. Groundwater is the key to our future, folks. We are a desert state. We're very good with economizing our use of things. But I would just bring up that what I saw were some very smart, capable people in the public and private sectors taking it very serious and figuring out how we reallocate. But bottom line for us, even with the concerns about water, especially with Lake Mead, we're in good shape here. As long as we continue to do what we're doing on water conservation, we're going to be on very, very good shape. Okay, the drama playing out with the Colorado River Water Pact. There's 7 states. We have been kicking this can down the road for a very long time. Everybody and their mother has been just trying to put it off. States are, and state borders matter. We all know that. I keep bringing it up on every show. But here's the thing. The federal government has finally said, enough. We're done with this. This is getting critical. They've stepped in. They are basically telling all the states, including California, that was trying to play a pretty tough hand, everybody's going to be taking big haircuts on water. Here's the good news. Nevada is in better shape than Arizona, California, Colorado. We are in better shape. We're smarter about water conservation. That was brought up by the people at the federal government. I expect to hear more about it when I go back to Washington, D.C. in September. But no, there's going to be a finality to this drama playing about the Colorado River. You know, the only other thing I was going to bring up, we need to still have the hydroelectric capabilities of the Hoover Dam. So there is concern that we've got to keep Lake Mead high enough up to generate power. So that's something many of us don't even think about, but it's very much the case. Okay, other things. There was a lot of fantastic articles in the paper over the weekend, especially, and I know I'm an old guy. I still like newspapers. I do read 9 different sources, but it was talking about how different the housing picture is today from other periods of time in Las Vegas history. Now, look, many of you who listen to this podcast remember 2008, 2009. I had an officer then. I know how rough it was. We all remember that. But here's my point. It's a different housing market today. That we're diversifying out the economic base. The swings maybe won't be as dramatic on the upside, but they won't be as dramatic on the downside. So with all that being said, I think it's just safe to say that a lot of people are realizing that if we can get more land from Bureau of Land Management, we can take care of our housing shortages. We will have houses for all different parts of our community, and that should help subsidize a lot of things going forward. Okay. You know, let's talk about California crazy. I love to talk about this. You all know I'm a former Californian. You know, although I grew up on the eastern side of the state, I'm not a coastal California. But we do need to say we have to pay attention to what our neighbors to the west are doing. I was just there this last week up in the San Francisco Bay Area, and I will tell you, these were people who had never thought they would ever leave California. This wealth tax that they are going to pass in the fall, that retroactively captures people from January, there is a large sucking sound of population out of that state, and it's going to get hard, it's going to get louder and louder. People are scared to death of what else is next. And also, I just have to say, you know, just going around there, my take, people are anxious about the economy. I mean, they're worried about AI job losses out of Silicon Valley, which was their golden goose. There's a lot of concerns about what's going to happen with their election. I mean, we know how, you know, we have primaries coming up over the next couple of weeks, Republican and Democratic, but it's just a very different feel politically there than here. I would just say that in talking with people, the mood was mixed at best. And I have to tell you, just from a personal standpoint, as I walked around San Francisco, it just made me, it was like a bygone era. It was just a hollowed out former financial center. It just had a weird vibe, to be perfectly honest. Okay. Next thing, you know, they love their frauds in California. Well, I guess now there's new investigations on Medicaid. So I guess Medicaid is a big part of the budget in California. The feds are already telling them that, look, unless you guys can explain where all the money's got, we've got some real problems. So listen, we're almost out of time. I just want to thank our sponsors, Winans Commodities and Winans Investments. If you are interested in being a sponsor or a guest on a future Winning with Winans show, please email me at winansinvestments.com. Also, if you missed any of this show or you want to share it with your friends and family, please download it on most of the major social media platforms, especially YouTube, or you can get it from winningwithwinans.com. You can also follow this on, like I said, most of the major media sources. Okay, I just wrote a latest article for Forbes. I highly recommend you check it out. It's all about the seasonality of the markets. And if you're interested in my books, go get Investment Atlas 3 if you want to learn about history. But anyway, everybody, good luck with your investments. Keep paying attention. You know what? It's a bull market. Run with it while you can. This is Ken Winans signing off. Have a great week. Bye-bye. Boy, that time went fast. I hope you had as much fun as I did during this segment of Winning with Winans. Make sure and tune in next week for another round of guests and interesting topics. And if you missed this, make sure and check us out on Spotify, YouTube, or go to our website, winningwithwinans.com, where there's a lot more information for you to follow. So good luck this next week. Look forward to seeing you then. Take care.